Welcome back to the Neuro Finance Masterclass. We are officially on day 74 of our 365 Days to Financial Freedom series. Now, yesterday we dug into the mechanics of exiting a losing trade using a stop loss, right? We sure did. But today we're flipping the script and dealing with the exact opposite scenario. And honestly, it's a problem most people assume is incredibly easy, but it's actually the absolute hardest challenge in trading. Oh, without a doubt, it's knowing exactly when to sell a winner. So today's theme for this explainer is Take Profit, the art of realizing gains. Let's get right into it because mastering this exact exit strategy is what truly builds long-term wealth.
Okay, picture this. You log in, you look at your screen, and you see a massive plus 50% gain flashing in bright green. Instantly, you feel like an absolute genius, right?
Oh yeah, you feel untouchable. You've conquered the market. It's a completely intoxicating sensation. You see that big number and your brain just screams, okay, my financial worries are totally over.
But the harsh truth is that this feeling of newfound wealth, it's a complete illusion. Here is the brutal reality we all have to face. Until you physically click that sell button, your unrealized profit is just a number on a screen. It is literally nothing more than digital pixels. Exactly. It's not cash in your bank account. You can't go to the store and spend it, and it's certainly not secured wealth. It's potential. And potential is not profit. The market is just offering you a temporary valuation right now, and you haven't actually accepted it yet.
So let's move into section 1, the greed trap and the neuroscience of holding on way too long.
We have to ask, why is hitting that sell button so incredibly difficult when you're winning? Well, it all comes down to euphoria. When you see those profits, your brain just gets totally flooded with dopamine. Right, and in that altered state, you start daydreaming. You're already imagining the cars or the vacations you're going to buy with all this new money. You start telling yourself this very dangerous, irrational story. You think, well, if it went up 50% this easily, it can definitely go to 100%. And that is pure greed talking. That dopamine flood completely traps traders in a cycle of euphoria. It literally forces you to hold on to positions and just hope, instead of acting like a rational operator.
To really grasp this, we need to look at the contrast between the amateur and the architect. See, the emotional amateur falls headfirst right into that greed trap. They genuinely believe a 50% gain guarantees a 100% gain, so they just hold endlessly, waiting for some magic peak that might never actually come. But to disciplined architect, they operate on one fundamental truth. The market gives and the market takes away. The architect knows that if you don't take your profit, the market will eventually and ruthlessly take it back for you. So they act decisively to protect their capital.
Which brings us perfectly to Section 2, Scaling Out, or what's known as the Kodamelli-Satish strategy.
So, how exactly does a professional architect execute their exit? I'll tell you what they don't do. They don't succumb to the psychological burden of greed. They use a highly professional, mathematical solution. They never sell everything all at once.
Right, they break the exit strategy down into calculated slices. It's usually a 25% allocation for the first target, another 25% for the second target, and then leaving 50% as what we like to call the moon bag. By cutting the position into these manageable chunks, you completely remove the paralyzing anxiety of trying to make one perfect, all-or-nothing decision.
Let's actually walk through the exact operational steps of scaling out. Step 1, at your first target, say a 20% gain or maybe a strong resistance level you've spotted, you sell 25% of your position. Boom, you've just locked in real money. It's off the exchange, it's in your pocket.
Then step 2, at your second target, you sell another 25%.
And step 3 is where the magic really happens. You let that remaining 50%, the moon bag, just run. But, and this is absolutely crucial, you move your stop loss up to your exact entry point.
Think about what you've just done here. You secured profits, and now, even if the market totally crashes, the absolute worst you can do on that remaining half is break even. You have instantly created a completely risk-free trade.
Moving on to Section 3, the absolute top myth and why leaving money on the table is actually a good thing. We need to dismantle one of the most dangerous fallacies in all of trading right now. Listen, an architect never waits for the absolute top. Never. Because trying to perfectly time and catch the absolute highest possible price of an asset is a complete myth. It's a fool's errand that will destroy your portfolio.
There's a very famous trading floor mantra for a reason. No one ever went broke taking a profit. It is incredibly profound in its simplicity. You know, leaving a little money on the table for the next person isn't a sign of weakness or cowardice. It is the ultimate sign of mastery. The architect is perfectly happy to exit, take their gains, and let some other amateur try to squeeze out those final drops.
Let's quickly break down the architect's post-profit discipline.
First off, if you try to chase that very last 5% of a move, you're literally risking a 50% loss on the inevitable, brutal reversal. It's just a terrible risk-to-reward ratio. Second, once we take our wins, we don't immediately throw them back into the fire. No, we move that realized capital straight to our dry powder reserves. We protect it.
Exactly. And third, we remain patient. We just sit on our hands and wait for the next oversold RSI signal to present a high-probability opportunity to strike again. Guys, this is how you systematically build real wealth.
All right, Section 4, the Architect's Harvest, which brings us to your cognitive task for today.
This isn't just theory anymore. This requires active participation from you today. We want you to look at your current winning positions with a calm, rational mind, completely free from the dopamine and the euphoria.
You have to treat your portfolio exactly like a farm. You harvest the crops when they are ripe. If you just stare at them, if you hold on and hope for a miracle, eventually the seasons change. The market turns, and those crops, they will rot right there in the field. Failing to lock in your wins will inevitably lead to your hard-earned profits completely disappearing back into the soil of the market.
So we're leaving you with this intense, provocative question to ask yourself right now. Are your crops rotting in the field, or are you harvesting today? Have you realized any of those gains you see on your accounts, or are you paralyzed by the greed trap?
It's time to act. Set your take-profit targets today while your mind is completely clear. Lock in those wins, celebrate your incredible discipline, and make sure you stay in this game for the long haul. We'll see you tomorrow for day 75.